All right, how's everybody doing out there tonight? This was kind of a very critical time. I wanted to catch everybody right now while we're in this super critical time right now. This is a super hardcore squeeze. So I'm just going to bring up really a super fast chart. I want everybody to be aware of what's happening. This is one of those few times, if you guys were watched my FOMO video the other day. So I had my FOMO video. And this FOMO video that I had on says all you really have needed to do is to trade 5 times over the last year, and that's it. You just could have made 5 simple trades using your crosses, all your death crosses, all your golden crosses, and you would have been good, right? So this is, once again here, look, there you go, death cross up above, just plummet. You would have made 1 trade right here. And this would have had you good for months. You would have just sat inside of this trade and not got stomped out. Okay. So this is where, hold on a sec. Hold on. I got ransacked by my daughter. She told me 1 minute. It's bedtime. So, all right, so here's where we go. Oh, man, I lost my OBS. So here's where we're at. We are in a super critical place. You could have placed 1 trade right here up top, and you could have sat in that trade all the way down here to the bottom and just kept moving your stop losses all the way down. So how I tell everybody to trade this situation, so you would have pulled your trade right here at this particular stop loss right here, right at this cross. So here would have been your trade position. You probably would have been up here is when the trade happened. I'm going to use 2 lines, right? So I'm going to use a white line and a yellow line. So what you would have done is when you started your trade right here, you would have put your stop loss above this right here. And then as this continued to drop down, what you do is you're just going to follow it down. And every time it bounces, you just move your stop loss down a little bit, over and over. Jesus Lord, that would have gone down. This would have come all the way up to here. So you would have kept moving your stop losses like this. Even when this came up, you would not have stopped your stop. You would not have been stomped out of your trade. Then when this dropped all the way down here for this bounce, you would have just lowered your stop loss to there. When this would have dropped to there, you would have lowered your stop to there. When this dropped all the way down to the bottom here, you would have moved your trade to here. And then this would have hit the very bottom and bounced, and your stop loss would have ended right here. So you would have got stomped out of this trade at 8,000. So you would have started this trade up here at 15,000, and you would have played this trade perfectly all the way to the bottom. Now you can do this over and over and over with the golden and the death crosses. You can do it with both. So once again, you can do it again right here. This shows you doing the same thing. So you start your trade. Now the trade would actually be down in here somewhere. You would pull your short. The price would dump. You would move your stop loss. The price would come up. It would never take you out of the trade. The price would dump again. You would move your stop loss again. And your stop loss would have gone to here. Actually, your stop loss probably would have gone to like there. Either here or there. And then you would have got stomped out of your trade again. So we are in a very exciting. Now let's show you one more time. Here you go. There's where you would have been. There's the cross. You would have been in the trade here. As this dumped, you would have just moved to there. You would have never got stomped out. It would have dumped down to here. You would have then moved your stop loss to here. It would have bounced up and bounced down here. You would have moved your stop loss to here. And you would have just continued this over and over. Then you would have hit the bottom right here. Your stop loss would have been right here. You would still be in this trade right here. You would never have got stomped out of this trade. You'd actually still be sitting in a short from... Now, you only would have been in the short at that point at 9,000. So you would have done from 9 to 6,800 roughly. It would have been, once again, a very lucrative trade. You know, you would have, it's a couple thousand points. but it would have been a super easy. So the way you pick your stop loss is you pick the highest bounce point above and below. That's all you're doing. You're just watching. So if this falls, once again, I'm going to go over it slow. So if you start your trade here at the golden cross and buy in at this price, as the price falls to this next level here, you find the next highest top, and that would have been here. So it's a higher low, a higher high, and a higher low. All you're looking for is the high of the swing and the low of the swing. So then this price, you would have never moved your stop loss. You would have just waited there to get stomped out. It wouldn't have mattered if this would have come up and stomped you out of the trade. You would have still broken even. You wouldn't have lost anything. But as this bounced up and bounced down again, all you would have done is you would have taken your stop to the next highest point. And then you see this just recurs. This would have dropped down, bounced up, and bounced down again, and you would have just moved your trade stop loss one more time to the highest point. Okay? So you never would have got stomped out of this trade ever. You'd still be sitting in this trade right now because your price would be right here and your stop loss would be right here. I got in this trade at 9,700 with a 50 ETH short. I wrote it down to here. I jumped out of it. I re-entered in as BTC, and I rode the rest down as BTC all the way down to the very bottom. I never came out of a short the entire way. You can see it. I have all my trades on Twitter, right? So this is another amazing time to trade right here. So I'm super excited. This is one of these. Look at how long. This is, you only get these death crosses and golden crosses very rarely. So you see, you would have played this perfect. You would have played this one here. This is a great cross. So we are at a very critical time right now. We are sitting, so I have been playing this cross since the top, right? For the new people, you're just getting in right now. We are about to cross again. And this time, this is even more vicious of a cross because we are sitting on the price. So this is going to be a very volatile situation. Let's look for the last time we crossed on the price. Here's a really close one. Trying to find the last time we actually crossed on the money. There we go. See where we crossed on the money right here? So here's the last time we actually crossed on the, oh, there it is. We crossed on the money right here. So if you would have taken this trade right here, this would, see, I don't know where we were. Were we long? Were we short? I don't know. See, it's very volatile when it happens on the cross. Look at this is a tough part to trade. And look at here you are here again. If this was probably a short, so this came down, this was coming down, it pierced it, this probably closed over the top of this, and then this was a perfect short. If you would have shorted that at 15.7, you would have ridden that thing all the way down to the bottom, and you probably would have more than quadrupled your portfolio. You probably would have been 10x on your portfolio. Okay? The MAs, you should be on the daily or the 12-hour, and you should be on the 7 MA, the 30 MA, and the 50 MA. And right now, we are squeezed. And this is going to break, okay? And I have been telling you to not FOMO into a trade. I've been telling you guys, don't FOMO into a trade. Wait for the layup. And we're about to get a pretty good setup right here. Now, this is crazy. It's a crazy time because if we break down, I really don't think we have that far to fall, right? I mean, we're at 6,500. I seriously think break 5,500 and we're going to 4,800. I think we would go from 6,500 if this breaks lower to 4,800, okay? I think it's a huge possibility we could go to 4,800. Listen, if 4,700 doesn't, 40, 45, 4,600, it's right in here somewhere. If this doesn't stop us, then it's a clear run to 4,800 here. Now, this is the same way. We can play this up. We do not care. Bull or bear, we do not care right now. All we want to do is make money. So if this puppy breaks up, who cares? We pull along. We play the run, we move our stop losses up as we go, and we take what we're given, right? It's irrelevant. This is not a bull or bear trade. This is simply a good trade, and we're in a very good setup place right here for a great trade, right? Now, here's how you could play this. You could play this right here with a long and a short at the same damn time, okay? So let me show you how you could set this up for a guaranteed win. Where'd my other arrow go? We'll find another one. It's such a scary part right here, seriously. So here's what you could do. You could set yourself up for a trade. So we'd be going in right here, setting ourselves up for a trade, right? And I'm going to use green arrows for a long. Give me a second. There's a green arrow. And I want a red arrow. We're going to use red arrows for a short. Okay. So if you go into this as a short position, right? You're trying to short this down. What's going to happen is you're going to set your stop loss probably right about, man, if you want to play this loosey-goosey, I would play it at 66.73. If you want to play this tight, you could play it at 66.20, right, for your stop loss. So your stop loss for your short, the way I'm going to play this, so I've already put in a trade right now. This would be your stop loss right here, right? This would be a loosey-goosey stop loss. Let's make that a little bit. Geez, that is super small. So this would be your stop loss right here at the top of this line. And or you could set your, if you want to be a little tighter on your stop loss, you're going to be right down at that line right there. Okay? Which is 65.88. Now, the opposite goes in the same way, right? So if we're playing this in the same light, we want to be looking for probably, I would say probably right here. So my stop loss would be set right here. And I probably see, I like this candle right here for my stop loss. I like this one right here. So this would be pretty tight right here. This would be tight right here. This would be a really tight stop loss right here at 64.71. And this would be a loose stop loss right here. Hold on a second, my daughters.